Hi, I'm Eric Kazatsky, Head of Municipal Strategy here at Bloomberg Intelligence.
And I'm Karen Altamirano, Senior Associate with Bloomberg Intelligence.
So thanks for joining us on our latest video looking at what's going on in the municipal market. And so quite a difference from our last video where we were discussing how high rates had gotten both in the U.S. Treasury and the Muni market. Now, obviously, thanks to geopolitical events and also a lot of Fed talk coming out, sort of reinforcing the idea that they may indeed be done raising rates, we've had quite the rally in U.S. Treasury rates, and that's bled into the Muni market. Are we ready to sort of call the bottom here as far as rates permanently reversing? I wouldn't say quite yet. In fact, our base case is still thinking that rates could indeed tick higher going into the last quarter. And there are some sort of headwinds that are sticking out, jumping out at us, especially with the U.S. sending ships overseas and thinking that if they decide to get involved in any conflict, whether direct or indirect, that could sort of cause a reinflationary spike that could bleed into the rates market. So definitely something that we're keeping our eye on for the time being.
Yeah, so one of the things we're keeping an eye on, with the pause, like you said, that we're seeing now with rates, which might continue to tick up higher, we
Yeah.
can take stock of what we can identify as data points that make sense and those that stick out. Obviously, for those holders who are looking for exit ramps from munis, the drop in yield is proving to be a decent time to sell.
Yeah, absolutely.
More importantly, for those looking to buy, we can point to some price-sensitive movements within the ETF space that are larger in nature but have historical context. For those not familiar with the municipal ETFs, the space is comprised of approximately 80 different funds, low beta, cheap options, with two main players making up more than 50% of the total ETFs. There's the iShares National Muni Bond ETF, known as MUB, which trades under the ticker MUB. And then there's the Vanguard Tax Exempt Bond Index ETF, known as VTEB, trading under the ticker VTEB. Year to date, both have had inflows of approximately 3.7 billion. However, the flow data over the past few weeks have seen opposing flows. So one thing that we noticed looking at the data a little closer, the 1 month flows for VTEB show a slight outflow, while flows for MUB are 2.3 billion, which is surprising since it's a 3 standard deviation jump from its 12-month average of 606 million.
Yeah, I mean, really something that jumped out at us when we started picking apart the data, and we thought it was pretty significant enough to actually make a short little video about it. And when we look at historical price and flow data from UB, the fact is this inflow came at all is not entirely surprising. So when we started to pick apart where inflows were sort of being driven en masse, it really has come in 3 specific time periods when MUB has reached its lowest price point since the beginning of the pandemic. So March of 2020, the middle of 2022, and now, 3 definitely distinct low price points. And we've seen large fund flows come in each of those time periods. To us, it's not really signaling that it's a mass of retail investors sort of jumping back into ETFs. In fact, if you ask a lot of folks on the retail side, like pure retail, if they even know what an ETF is, they'd probably say no. And if you specifically ask them if they know what a Muni ETF is, they're definitely going to say no. So to us, that really signals a platform shift and, sort of a large shift coming in from a wealth manager or a wirehouse that's sort of trying to get exposure to munis in large size. And, the thing and the beauty about ETFs on the muni side is that, in a time where we have low issuance, it is one way to get immediate exposure to the muni market and start deriving that tax exempt income. And the other thing that are really nice about VTEB and MUB, they're passive products, right? So they're not swinging for the fences on a total return standpoint. You're going to get exposure to the market immediately, and you're really not dipping down in credit quality, right? Solid AA credit quality, really sort of down the middle of the line, AA credit, pretty vanilla exposure to the market, so not a lot of risk in there whatsoever. So you're really getting what is being advertised. So I think, for a lot of folks who are trying to sort of put clients in there, from like the Morgan Stanleys of the world or the JP Morgan Asset Managements of the world or things like that, that's probably where we think, large flows like this are coming from. So definitely something we're going to keep our eye on going forward when we see, prices dip down either for VTEB or MUB. And we could sort of test this theory and see if we see another large inflow come in. Until then, really keeping our eye on to see if fund flows on the mutual fund side turn around for munis. Because it is our sort of core belief this year, and we've said this in our outlooks, that we don't think total returns are meaningfully going to come back in a large way to the muni space until we see sort of a pattern of repetitive inflows come in on the mutual fund side, something we haven't seen just yet. So thanks again for joining us, and see you next week.
Thank you.